Well, hello and welcome to Safety in the Market, everyone. It's Darren here, and I'm going to take you through some short trades on coffee during the month of June that our students were studying, watching, analysing, and paper trading. Okay, so just part of our series. Last month we were looking at oil, and this month it's coffee. Okay, so we'll just run through. There's our disclaimer. I just want to note quickly, we've got about 5 trades here during this small bear run on coffee. And these first 2 up here were actually in the month of May when we were talking about oil and trading long out of that double bottom in oil. So some of our students would have been involved in this top here, even though it's in the month of May and we want to really talk about June. But I've just thrown them up there because it just shows you when our students are starting to think about trading or getting involved in a market. And then obviously we'll have a look at June's excitement on coffee. Okay, so we'll head in to the software on Profit Source and we're just going to walk you through. So there's that top. And we were talking about a top in coffee around this mark. So some of our students who specialize in coffee would have been looking at this very carefully. I've put in here that they may have entered at the break-in of the low of that bar, but I'm sure some of them, if they're on top of their game, would have got in during this day, intraday, and got themselves a nice small risk entry for a long, large reward. Okay, but just for our figures, I'm assuming that we got in down the bottom here on this day, and our stop loss is all the way up at the top there. Okay, all right, and we'll just play on the side of caution there. And I've called it an aggressive entry because you are getting in intraday or on the day of the turn, which means you could get it wrong if you haven't done your homework properly. And if we just roll down a little further into that week, we have an opportunity here for what we would call the safest entry under the rules with W.D. Gann and David Bowden. Okay, so this would be a lot safer entry than up here, and oftentimes you get a better entry because, as you can see, it's a smaller bar. If we do get in at the break-in of this low, our stop loss will be at the top of this bar, and it's about half the size of that initial bar at the top. Okay, so then some students would have got involved at that point, and we just watch as coffee makes its way through May. And there's a sort of slope there. It's not falling like a bomb, but it's there is a bit of a slope heading downwards. And then this would be our first opportunity in the month of June. This bar here with this little low is the 3rd of June. And then we sort of march up to a potential double top here. And as we were watching it and going through our analysis, that would allow us some confirmation and confidence to maybe try for an intraday entry opportunity here. And as we can see, it's quite a big bar in the end with a weak finish. So we would be glad that we got in, or we were able to get in intraday. So I just want to take you back in to have a look at this. Here's our intraday charts. This is our 4-hour chart on the left here. And as you can see, we've got some reasons for a top around 377, and the top was 376. And then here we go down to our 1-hour chart, so we get even closer in, and we've got 1, 2, 3 separate reasons for a top around here on the smaller time frames. And then if, as this bar here hit the last point in our cluster, people might choose to get in there or close to there, or a lot of students will wait, and they'll wait for this bar to be confirmed as the top, or potentially the top, as we break below it the next hour. Okay, so that entry would be in here with our stop loss above there. Okay, and then they can sit back and trade it end of day style, having got in a nice close entry at the top there. So we'll have a look at it We do get in the next day for the end of day traders. It's heading down. And then we're coming up here to another entry zone. Okay, so this would allow us a standard entry that we use day to day. Our trend is heading downwards here. We've had an up bar. If we break the low of that up bar, our students would be allowed to get in at that point. And this actually, if I just click on here, this is where I got in. This happened while we were in our live coaching session, our 2-hour session, and coffee's right down the bottom of our list of 12 markets that we look at. It's number 11. This happened. We were actually here as we were talking about it. The market had gone up earlier in the afternoon. Coffee opens quite late in the day here in Australia. It headed down, and this was happening as we were talking about it. So once the recording was finished, I was able to jump in to my platform and get short coffee at that stage. Okay. So that was quite exciting for us to see it happening in front of us while we were discussing the possibility. And as you can see, it fell away nicely. And then it starts holding up. There's a bit of support there. And then we get another possible entry here, another standard entry here. So I took this trade again as well. So we got in the next day. So the breaking of that low, stop loss above. At that point, when I enter that secondary trade, I would make sure that my stop loss had been moved down to break even at this stage. So I'm only having risk on that one trade there. Now, as we approach, and I know there's lots of lines here, I'm going to quickly talk you through these lines as we go. For this particular trade, this green line here, so I've matched the lines with the colors of the trades. So the green line here is a sort of warning area for us for all trades that we take. And we see how we held up here. And we almost touched that line and then bounced. So that was an early indication for me that maybe we were in a little trouble for this trade. So we watch, okay? We watch, and then we hit this green line this time. At that point, our rules suggest that we now move our stop to break even. Yeah? Okay? My problem was because of our system and how far we had come, I was concerned that this last trade might be the last trade in this particular run, especially if we held up at this point. So me being quite conservative, I got out at that green line. Okay, so a small profit here, a nice big profit for my pink trade, if we could call it the pink trade. And as we can see, you know, we're into July here. That's July the 7th. Okay. And then the market started messing about at that stage. All right. And that's pretty much brought us up to where we are today. And then there was another up bar here. And as you can see, there's a bit of support coming in. And quite often that area that we look at first for some danger can hold that market up. So, you know, quite a lot of our students may have been in from the start, around the middle of this run, or towards the end like myself, may have taken this opportunity here to eject and think, thank you very much, I'll take my profits and I'll wait for the next trade. So I'm just going to quickly run you through the colors. Our gray trade up here, the initial one, and I've put aggressive, and I've put an aggressive profit target down here at 261 as well. I thought I'd just follow that theme. That could be a possible target for the guys up here. Then with our safest trade, our second trade here, I've got a yellow line. It's quite hard to see it. It's just under the words there. Okay, at 315. They would have exited their trade at 315.3 there. That's for that trade too. And then our intraday crowd who got into the blue trade, now their line is down here. Okay, So they would be getting out around, I think that's 291. Okay, so they would have been happy there earlier, well before the green line. Our pink trade, my first trade, we had three options. The safest option is this pink line, 311. The next 292, and then one following at 273. I took the 292 because it came in just before our blue line there from our double top trade. So I was quite happy to get out there if that's where the blue trade was going to finish up. And then the green line shows us our danger area for the last trade. And I certainly exited at that point. And I think most of the students, no matter which trade they entered or however many trades they entered on the way down, saw this as a danger zone and took their profits at that point. Okay, cool. All right, so we'll head back inside. There's our trades and our picture. That was a few days ago. I took that slide. I've shown you a more up-to-date chart in the software. That was our intraday entry that we spoke about for the blue trade. And we'll just run you through. This was our aggressive entry at the top. And, you know, a 5-to-1 reward to risk ratio there. So that was good. Our safest trade, the first lower top, we had nearly 7-to-1 on our reward to risk ratio. Okay, so they did even better than the aggressive traders. Then our blue trade, which was our intraday entry. And look at our reward to risk ratio now, nearly 20-to-1. So you can see the benefits of being able to foresee a turn or a swing and then try to enter intraday, even if you're going to manage it end of day or weekly. They've gone away with nearly $4,900 for their trade. Okay, they've done very well. The pink trade, which was my first trade, we've got over 4-to-1 reward to risk ratio and over $1,000 profit there. And then the green trade at the end still got nearly 5-to-1 reward to risk as they entered the trade, which would have given them over $1,000 if they hung in the trade and it went to their profit target. But the stop loss was moved down to break even. And then, as I said, a lot of us would have got out at that stage, having sensed a wee bit of danger up ahead. So just our combined profits from the 5 trades, and no profits there for the green trade. As we got out break even, you may have got out there as I did on the green line, so you would have had a small profit for that trade. But more importantly, that green trade, when it started holding up, just gave us some signals about maybe it was time to exit the trades. Okay, which is as important as any of the profits that we took in already, because it protected them profits and we got to bank those profits. So, you know, it was a 2-month run there. Okay, and I know we're really only looking at June, but some traders started in May, as we spoke about. So if you added them all up, you'd be over $9,000 there, plus a little here in the green trade if you got in down at that danger zone. Okay, so not a bad effort there from the guys on the coffee market in that last, say, bear run that we've just watched appear in front of our eyes. And then we'll be back again in a month to see what we traded in July and how we went about our business in the classroom, on the forum, and in our family here at Safety in the Market. So we'll see you soon. Thank you.